Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Linn & Associates with your metals market update for this Thursday, the 27th of April, 2017. We're just around 2 p.m. Central Daylight Time. So let's talk about the metals. You know, we saw the president reverse courses on NAFTA again. Now we're with NAFTA as he's negotiating, or has his teams negotiating with the Canadian and the Mexican delegation so that we can make a trade agreement that he says is going to be better for us. It sounds as though a deal is now in place where they're going to extend for another week or so to keep the government open as everybody does their jawboning and wherever they're going. Libya is back in the market, as I read, and producing oil again, and oil got hit pretty darn hard. Now, it's $1 off the lows. I mean, there's going to be a number where it bounces from, and the market is obviously fearful of what it's going to see in that market in terms of looking at inflation numbers. It's also fearful what's it going to see in the rig count tomorrow. Then we step to the metal markets, and the gold market is doing a very good job of still trying to fight between the 18-day average of closes and the 200-day. It is not in an uptrend, but it is a market that is trying to get its legs under it in this area. Silver did fall under the 100-day average. It's acting weak, as it should if that's the case. The copper market's still a market that in the 260 level, the question is what's going to make it go up, and that's the big question. Then we look at what the European currency did, and today Mario Draghi kept monetary policy unchanged. But I think if you're looking for him to make a change in front of the final outcome of the French election, that would not be a good bet. The odds were he would stay just as he was, because just like Brexit and, of course, President Trump's win, anything can happen until it's done. So a little caution there, and I think he was wise with that. So we're getting a correction in gold, but I did an interview this morning with the Wall Street Journal, and they were asking, you know, people are saying this is a depression time in the commodities as they're falling, and I said it's not really that. I said one market in metals has still been good, and for the year, gold is up from the 1150 level, it began there, and it's still up here at 1266 level. Any way you want to cut it, that's the reality. The other market is the meats, the cattle market is on fire, and it's on fire because I think, at least, number one, America loves beef. Number two, we've got the barbecue season. Number three, China is going to be taking imports of beef again. All of that works with low grain prices, a great way to feed, and if you have an export market on top of it, watch out. So in the gold, if we go to a daily area of charts, the reason I mentioned all that is you don't have inflation. So the stories that are there for the gold have been pulled out time and time again. Korea, do you think we're going to war with them? Well, if you do, you should be loading up on this market. If you don't, that's no longer the story. Inflation's not the story with energy. Where's your story? Cheap grain prices, where's inflation for everything? We're seeing jobless claims go back up right now. So home inflation's there. Maybe that's the area. But June gold, been coming down about $30. It's been a labored break back into a general support area that the market has right through here. You see that support area on the charts in this general area. But folks, I'm not making a bullish argument. And some of you write that I am. I'm not. This is the correction phase. I don't know what we have right here. What I can tell you we have is a higher high and a lower low trying to get a bounce in the market, and that's it. This part of the market is not trending on the swing line. The market is caught, and I will stick my neck out there, and I've said it day after day, that when it broke, I said I wouldn't be surprised if the 200-day and the 18 act as support, and what they're doing right now, the 18 has switched to near-term resistance, the 200-day is support. Could the market give ground here and sink back? It could, but to what levels? Probably the 1240s, which fits in with another level of support right back from all here, the lower Bollinger Band. Is there a trade in terms of momentum right here. Yeah, it's down. So you have two elements on this chart for the bearish side. You got momentum still pointing down. You have prices under the 18-day average, but you're not trending because you don't have a pattern. Even a downtrend requires lower highs, lower lows. It's an uneven price here. Now, I think a lot of people are looking down the road saying maybe if the gold can get going. The question is, what's going to make it go? You got to ask yourself that. In terms of gold against silver, it exploded all the way up that way. So now you got to take your bushel or your, let's talk a shopping cart that you're a thief. You stole one at one of the grocery stores. You got to put in 73 ounces practically of silver to walk out of there with 1 ounce of gold. And that's what this represents. The higher the number, it means that silver's losing value to gold. When we go to the gold ETF, this is also a market that's interesting, but it's in a downtrend. So if you're asking me where's the downtrend, ta-da, it's here. Lower highs, lower lows, under the 18-day average with momentum pointing down. Admittedly, the 200-day moving average is acting as support and resistance, the 18-day. This at least has a clear bearish picture. Another clean bearish picture has been the gold miners. Lower highs, lower lows, riding the lower Bollinger Band, but all of a sudden very oversold and nowhere near the point of converting itself from oversold to locking in the downtrend. Now, is it going to be able to push this down further? That'll be the big question. Resistance is the combination now of the 100-day average and the 18 on the way back up, if it goes up. The silver market today got under the 100-day average of closes. Now, yesterday, if you take a look, it got hit, came back from that level, and now it's trying to figure out, can it go to another level here? The Bollinger Band it's under, you're 2 days in a row, 3 days in a row under it now. The odds favor you're going to get a bounce in it. That's all I can tell you going in to this. You generally don't go more than 5, but a bounce is not a change of trend. You are oversold in a downtrend. Silver ETF, downtrend, lower highs, lower lows, oversold, fighting a battle at the lower Bollinger Band, which it's riding. That is bearish. And the first challenge of the 100-day average, just like the futures. We'll see if the market can stay under there. In the past, when it's recently gotten under the 100-day, it has bounced away. But it only started getting over it back here in February. So that's important to keep in the back of your mind. In the copper market, you have a clean pattern of lower highs, lower lows, resistance, the 18-day average at 260.15, take out 260.80, and you negate the downtrend. And in fact, you'd have then a pattern of higher lows, higher highs, looking for a potential challenge of the 100-day average at 264.35. The spread that I've been showing you here, the platinum palladium, this just continues to be a money deal in terms of the platinum going down, lower highs, lower lows, but now approaching the lower Bollinger Band in an oversold condition. Wouldn't be surprised to see support. And look at the palladium in its own life going the other way. Now remember, these are both catalytic converter elements. They're used in automobiles. One for everyday cars, as we drive in America, the gasoline, then the diesel cars, which are very popular in other parts of the world. We'll see what goes on. By the way, I'm already hearing that certain manufacturers are pulling back in the American market from diesels. They're going to be producing less and less of them. It makes sense because they never really caught on in America, and with electric cars starting to really take over, why keep investing in that? But you're in an uptrend. They're flip-flop of each other at the upper side of the Bollinger Band. Dollar index, still bearish. In terms of momentum, down. Well, that's here, and it might convert to an embedded reading. Bias is down, but the pattern's still one of a higher high, a lower low, and if you get under today's lows tomorrow, you could end up with the lower lows. Then the question is, do you embed it? A lot of people, after listening to Mario Draghi, think that the euro could be headed to higher prices at the expense of the dollar. I've read two reports today, one for 113 in the euro, another long-term back to 1.25. If they're doing that, they're betting the dollar's going down. That could be bullish for the metal markets as a whole group and other commodities as well if the dollar were to take it on the chin. I'm Ira Epstein. You have a great day, and I will talk to you all tomorrow. Take care now.